Hey everyone, Coach Investor back to another video for today. So it's going to be a different type of video, not on a specific company, but on a broader topic, mainly war, investing, oil price crisis, and some history behind that as well. So I'm going to jump right into this. This picture is probably very, very popular by now. You've probably seen this on Twitter, on other people's channels as well. The impact of global crisis on Dow Jones. So it says here number of days until it hits the low. Let's take the Lehman Brothers collapse here. It took 40 days. There's a change of 33%. But if you fast forward 1 year later, you're up 40.2%. This is the opportunity that you get when investing during certain difficult times. This great quote here by Churchill comes into play. Never let a good crisis go to waste. We go back to the picture, we see world closes due to COVID-19, took 23 days to hit the lows. 1 year later, 78% on the upside. Obviously, this was a very, very fast, a V-shaped recovery. Most of the growth stocks that experienced huge growth during that period of time have come down to their pre-COVID levels. Not all, but a lot of them have. Now, let's move on to the next one, which shows us the US equities performance in the first 44 trading days, 123 years history. This year, 2022, we are now in the top 2. So a podium place for this year in investing. So don't look at this as, oh, this is going to happen each and every year. No, this is a phenomenon that rarely happens. We're down 11.9%. Maybe today or the day you're watching this is a bit different, but we're on par with 1920, the Great Depression. So we're doing a bit worse than back then, but I'm pretty sure that our lives right now are a bit better than what it was in 1920. The only one that's worse than today was obviously after, well, not after, maybe in between both phases of the financial crisis back in 2008. So top 2 position here. Again, I don't want to time the bottom or anything, but never let a crisis go to waste. When there's fear, when there is blood in the street, this is when you have to take the opportunity to think long term. With Russia, so maybe not everybody is thinking about investing right now, especially if this personally affects you. That's completely normal, but just showing what history tells us during those times of uncertainties. The market also shows this, right? When something happens, something that already was talked about a long time, when it happens, usually the market goes the opposite way because uncertainties, the market doesn't like that. When something happens, fine, we know what's going to happen. We're more certain, so the market is a bit more calm. Now, obviously, whatever is happening right now with the stock market does not have to do or not completely have to do with whatever is happening with Russia and Ukraine. Some companies just had extremely high valuations. Some companies benefited extremely well from COVID. And now that we're coming out of this pandemic, some of those companies are taking a hit. Now, obviously, those events coincide with each other. So some might say that everything that's going on right now is because what is happening in Europe. But another good factor, maybe not good, but another bad factor here is the prices in oil. As we can see right here, this is the crude oil futures. We're at $109. The peak was at 130 or so. We came down right now because the situation between Russia and Ukraine is calming down a little bit. Again, I don't know what's going to happen. Nobody really knows what's going to happen. So don't try and find answers because we're dealing here with a particular human that does whatever he wants each and every day. Now, if we zoom out, you remember what happened here in April 2020, oil prices went negative. What happened then? Basically, the beginning of the pandemic, not a lot of people were traveling, weren't allowed to travel. So the demand for oil decreased. The supply, it's very, very hard to stop the supply. You can slow it down, but even that takes time. So something happened, demand fell, supply stayed high, prices dropped, but that didn't stop there. We had the Russia-Saudi Arabia oil price war, which is something that what happened here might be used today. So I'm going to read here what is said on Wikipedia. Again, not everything that's written on Wikipedia is correct, but this is fairly correct. On the 8th of March 2020, Saudi Arabia initiated a price war on oil with Russia, facilitating a 65% quarterly fall in the price of oil. In the first few weeks of March, US oil prices fell by 34%, crude oil fell by 26%, and Brent oil by 24%. I'm not an oil specialist, so don't ask me what's the main difference between all three of them. They're all oil. The differences, I honestly don't know. The price war was triggered by a breakup in dialogue between the Organization of the Petroleum Exporting Countries, or OPEC, and Russia over proposed oil production cuts in the midst of COVID-19. Russia walked out of the agreement, leading to the fall of OPEC Plus alliance. Oil prices had already fallen 30% since the start of the year due to a drop in demand, like we've said. The price war is one of the major causes and effects of the ensuing global stock market crash. In early April 2020 and again in June 2020, Saudi Arabia and Russia agreed to oil production cuts. The price of oil became negative on April 20. Oil production can be slowed but not stopped completely, and even the lowest possible production level resulted in greater supply than demand. Those holding oil futures became willing to pay to offload contracts for oil they expected to be unable to store. Now the issue today is obviously not the demand. The demand is there and then some. The problem here is the supply. We're sanctioning Russia, which is one of the main suppliers for Europe, a little bit for the United States, but not much. And the United States does not want to produce more because the United States has a lot of oil, a lot of oil. But since the current administration has promised to go against and go green and whatever, fracking, anti-fracking, this whole story, maybe they do not want to backtrack to what they said, but it becomes pretty clear that some people are making a lot of money from this situation and the general public is paying the price. Now, obviously, they can claim this is all because of Russia. Yes, maybe some of it is because of Russia, but you can fix this situation by doing a couple of things. It doesn't really take that long to start producing more oil or just announce you're going to produce more oil. Trust me, the gas prices will already fall. I also don't understand why the United States wants to deal with countries like Iran, Venezuela, and Saudi Arabia to fix this current situation. To me, this doesn't really make any sense. When you have your own oil industry in your own country, why go to countries like Iran, Saudi Arabia, and Venezuela? Makes no sense. So again, speculation here, but some particular people are probably making a lot of money from this situation. And as always, the general public is taking the hit. Now, in Europe, it's even worse because Europe, for example, Germany, gets a lot of their energy, their gases from Russia. Now, with all of these sanctions, in Europe, you get hit even more because where will we get our oil from? If the United States is not willing to produce more and then maybe deliver it to Europe, what are we going to do? The price here is rising, and in the United States, you're at $4 or so a gallon. Here we're at €2 a liter. I quickly converted the numbers, so €2 is $2.20. 1 liter is a quarter of a gallon, so right now we're close to $5 a gallon. If you're from the United States or if you're from Europe, now you know the difference. But to conclude, the current situation is very, very complicated. It's not just about territory. There's a lot of money involved, a lot of power moves here and there. What I just want to say is that a lot of countries can learn from this situation, and that's the fact that they have to count on their own country instead of counting on somebody else, because sooner rather than later, that other country might change its mind, and then you as a country, as a population, basically are screwed. That's the effects of globalization. When you start manufacturing outside of your country, when you start having contracts with other countries, like Germany and Russia and Europeans and Russia for their gas and oil and whatnot, this was bound to happen sooner rather than later. So obviously, I do hope that out of this situation, some people learn some lessons. And by some people, I mean the leaders of some major countries here. And market perspective, obviously, if you're a long-term investor, there's a lot of opportunities right now in the market. Don't ask me what stocks I'm be buying. You know my portfolio. It's in my pinned comment on Twitter. I've been adding to my main positions, so Tesla, Square, the top ones, because long term doesn't really matter what happens right now. You can find gems in this market. Valuations have come down significantly, and I do like to shop when a lot of people are fearful. So that will be it for this video. Like I said, a bit of different type of videos. Let me know down in the comments below, share your thoughts on the current situation, whether it's the market. Politically wise, I don't really want to go that way, but maybe if you're an expert in oil, do let me know down in the comments below what your thoughts are. And if you like this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. As always, guys, take care, stay safe, and see you all in the next video. Bye bye.